Hi there, I'm Dean Heskin, President and CEO of Swiss America, and thanks again for tuning in to our most recent episode of our podcast entitled The Secret War on Cash. Kind of a grim term, kind of a serious sounding term, but is a pretty serious thing when you given the nature of the state of things that are going on in our marketplace, our economy, and the world we live in today. I have with me my co-host, Chris Agelastos. Chris, thanks for joining us today.
Yeah, thank you. Always good to see you.
Nice seeing you as well. And it's been a little while. I've been out of town for a bit. Haven't seen your sunshiny face for a hot minute anyways.
You needed a break from me. That's okay.
No, not you. You and everyone. Not at all. I'm just kidding.
Enough.
But we're going to kind of pick up. We've been on this theme here recently about what's been happening with the price of gold. Not because we're married to gold, albeit it's a part of what we do and part of who we are. It's just gold has been capturing headline after headline after headline and continues to do so. And the first article here, Chris, entitled "Why Record-Setting Gold Prices Will Fend Off Headwinds and See 30% More Upside," according to famed economist David Rosenberg. Now, to kind of start here, we began this year gold prices trading in the roughly $2,000 price range. We very quickly rose a couple to even close as much as $300 right here at the beginning of the year.
Yeah.
So to say another 30%, number one, that's a pretty good sized move. But number two, it kind of falls in line, and we've mentioned this even on other podcasts this year already, with the many predictions that came out at the end of last year, or let's call it the fourth quarter of 2023, where even then they were suggesting gold prices, when I say they, talking about economists and analysts and, those market forecasters, that gold prices were going to hit levels of in excess of $3,000 by the end of 2024. So what is David Rosenberg talking about here, and what kind of things do you see happening?
Well, the main point is that there's just a lot of strong demand, and we've been talking about this. What's funny, through my years here, anytime I see precious metals rise, it's usually a big jump, and then maybe it's followed by a kind of flat period, and then another big jump, and it's never this nice straight upward line that clients, or the rest of us, everybody would like to see. But all of the things we've been talking about, central banks buying, electronics, manufacturing, computer chips, all this new AI technology, the elections that we're coming into, obviously, two pretty polarizing candidates, right? A lot of people picking one side or the other. Looming financial crisis. We can go on, but it's been this perfect storm for a while. And the analysts, as well as us, have been saying, look, expect prices to jump. And this is how they do it. All of a sudden, you get a big upwards correction and movement. And it beats previous highs. And that's kind of the period that we're in right now. What I like about what he said there is at the end of this article is that people need to just go heavier in gold than they normally would, because there's very little downside risk and large upside. Even though we don't necessarily preach to people buy gold to make money, it's more stability, protect the value of your dollar. But of course, at the end of the day, we all want to make money too, and that's really where we are right now. I think a lot of the world, and certainly the United States as well, is realizing there really isn't a downside, and there is a lot of security and potential upside. So why shouldn't I have some gold?
Sure. For the record, or to be clear, there are a lot of ways people, have heard or know to buy gold. They can buy it through ETFs. They can buy it through mining shares. They can buy it through gold funds. But in particular or specific, what I think is really key, and this will kind of get into the next article we're talking about here today, is getting into the physical gold market, because it's an unencumbered asset. It is an asset you own. It is not tied to someone else's debt. if you're in a mining share, an ETF, or any form of a metal or gold that is exchanged or traded on an exchange in paper form, that really doesn't put you any closer to owning physical gold per se, any more than owning Home Depot stock puts you any closer to owning lumber. So
Right.
I think that distinction is very important, and that's where, as I mentioned in this second article, it talks about how, well, it's entitled "Gold Hits Fresh Highs as Central Banks Ramp Up Purchases." And
Yeah.
there again, to be clear, we're not talking about them, buying ETFs or things of this nature. They have been,
No.
and for the record, for years now, they have been one of the biggest buyers of physical gold out there, central banks, and they're doing it for hedging purposes. And we're now seeing this from the establishment known as BRICS, where they have actually, to some extent, even kind of taken over in terms of the big buyer on the block as it relates to central banks. But tell us a little more about what central banks are doing, and explain a little more why they might be doing it.
Yeah, so they're essentially, and they have been for a while, especially China and India. They're buying physical gold to back up their currency, and probably the easiest way I could explain it to people is how many entities, whether it be an individual or a bank, have you known in the past to have hordes of gold, right, large gold reserves, and go broke?
Right.
I don't hear many of those stories. And so what they're trying to do is what all of us as individual investors should do, is just try to shore up our reserves and protect ourselves so that no matter what happens with the dollar or any other currency in the world, or any of these currency wars that we're seeing, like with the BRICS nations versus the dollar, so that we're less affected by that. It doesn't mean that I tell people gold isn't necessarily a cure for everything. It doesn't mean you're not going to maybe feel a little pinch or a little pain depending on what's going on in the world, but you're going to be a heck of a lot more protected than somebody that doesn't have any. And that's why I go into, what is the downside? As long as you can hold it and store it securely, and obviously don't tell everybody your business. I don't recommend bringing it out and showing all the neighbors what you just ordered. But keep your business private like you would with anything financial, and you've got something there that you can count on for really, the end of time as far as we know it, because that's how long people have been, counting on it in the past.
Right. And, it's interesting too in this article, we're not talking about this today, but I like the part where they discuss, in fact, I'll read it here, in sympathy, silver prices have also bounced, and the precious metal is near now a 5-year high. Which, you're looking at silver in the $27 and change range right now. What is very interesting is that in fact, I just covered earlier today in a communication or an email that I'd sent out to a group that subscribed to that, where there are a lot of projections now that are suggesting that we're going to see silver prices as high as $50 an ounce by year's end. And again, when we're at 27 today, that's a pretty sizable move, which is a good segue into those who are tuning in right now. If you haven't already contacted our office, we have a fantastic offer for an introductory product or promotion for new buyers, new customers, for Walking Liberty half dollars. They currently are trading, or you can pick these up at $13.50, which is as low as you're going to find them anywhere. And we're doing this for the very reason that most people, or many people that contact or have contacted our offices over the years, have never had any involvement in this marketplace. And we wanted a good introductory product with a good introductory price that could let people kind of put their toe in the water. So if you haven't contacted us, do that, please. You can call us at 1-800-289-2646. Visit us online, www.swissamerica.com. To make the call, to make the inquiry online, there's no obligation. I would encourage you highly, though, to find out about it, especially given, some of these things, these forecasts that are being talked about or discussed in the precious metals market. So as always, Chris, thank you so much. And for those of you tuning in, thank you as well. If you're not following us or subscribing to this podcast, please do so. And until next time, we look forward to bringing you more information just like this. Have a great rest of your day.